Okay, good. So there are a couple questions here related, and you can, whoever wants can jump in here, but they deal with the ethanol subsidy and the agriculture lobby and that related to what's going to happen with biofuels. Are they going to be eligible for that? Should it be inclusive, or should we get rid of the subsidies altogether? Thoughts? That's obviously going to be a topic in Congress soon with the budget pressures and everything else. So what is the view from people that have talked through that?
Well, again,
It'll pick up.
Okay. Well, it goes to the the political 2-year election cycle and where a lot of these representatives are from in states that grow the first generation biofuel, corn and all that. Fortunately, San Diego being in the leading space, the next generation is what is going to, I think, garner support. I think the support for the first generation of biofuels is waning as the public sort of understands the broader implications. But I think San Diego, I'm, as a native San Diegan, I'm really excited about San Diego's role in that next generation, and that's where continuing the funding of from the research standpoint, and then as it shifts to production, again, a long-term policy framework. In the short term, who knows what's going to happen with the election coming up and all the politics and that. And we're constantly asked about what's going to happen with different incentives. And given this election environment, and the budgetary constraints, it's a really tough way to look forward and figure out what exactly is going to happen.
Not to mention election cycle. Anyone else like to comment on that?
I mean, I think it's important to distinguish indeed between the first and the second generation biofuels. Making biofuel out of corn is not the best idea, especially in times where we have rising commodity prices and although no core inflation, but real inflation. I don't think that corn as it is being grown today has not been engineered over the last 50 years or so to be a feedstock for biofuels. And I think that in this respect, the white biotech industry is being put to or called to the table. The companies here in San Diego to find sources for biofuel which are much more efficient, rapidly growing, less environmental impact, more efficient than corn ever can be.
Any other comments on that? I'm going to move to a more technical question. This is probably for you, Tom. How will the changes in FASB's exposure draft on lease accounting affect renewables?
Well, a little background there is the lease rules are currently the U.S. rules and the international rules are in the process of converging, and the international rules would require leases to become on balance sheet, and so a lot of lease financings are not on balance sheet from a developer standpoint, and which has to do with, is it treated as a liability, and so it impacts the financial statements of the parties involved, and I think the lessor side of that is still in debate. But there's a lot of concern that that's going to shut down the use of these sale-leaseback transactions, where it's going to basically make the accounting be detrimental and bring on additional liabilities for purposes of the lease transactions. A lot of it came out of the sort of Enron era of all these off-balance sheet financings, and so there's a lot of accounting push to reflect those as liabilities. But it's something that is on the radar screen from a tax equity investor perspective as far as the time frame of, and when I think it won't shut down the lease market, but it'll have, some people will not like the dynamics of what it does to their financials.
Anything to add?
We had that discussion in a couple of specific projects, and in those projects the question was the sale leaseback indeed, or the lease, inverted lease, whatever, indeed the best structure, or should we go to a partnership flip, which has various different implications, but it will be a problem. It will be an issue for these transactions. I agree.
So the valley of death term that you used, Jerry, is, I have a different valley of death, the early stage, how to get it financed and get it moved from discovery into products. You're using it in a slightly different term, but there's a question about how many of these projects are really abandoned that are financed and then go away. You mentioned that it's challenging, but is that a very frequent or sometimes happens?
So many projects achieve a number of milestones, like site acquisition, perhaps midway through their permitting, but they stumble. Very few projects achieve project financing and then are abandoned or fail. Typically, when you go through sort of a conventional project financing, there is a significant amount of due diligence, and 6 months worth, independent engineers, sponsors, lawyers, tax equity lawyers, lenders, lawyers, your engineer, the independent engineer. The farther away you are from the last deal that was done, the more sort of explaining you need to do, etc. So that's a good process to go through once, only because it just prepares you for the hopefully many times you intend to go through it. And a lot of companies never achieve that because there's just quite a few flaws in their project or in their technology or in their underlying contracts that where they die. The few projects that did sort of go off were these ethanol projects, but they were not project financed. I was at HSH North Bank, which is a London bank. We were the #1 renewable energy finance bank in the world. We went from being a nobody to being the largest for a period of time, for like 3 or 4 years. And we just couldn't finance those deals. But those deals were getting financed by the likes of the VCs, which was weird, because they didn't intend to do, sort of stay in throughout the entire process. And a lot of those projects were built, were financed, were capital intensive, and are mothballed right now. And, it's just, it's difficult.